Hey everybody, and welcome to Livestream with the Mohawk Forex True Scalping team. We take on the craziness of today's news and market. www.mohawkforex.com for information on how to join our team and True Scalping, which is what we're doing on our 3-minute time frame. So today, big news day. Moment. We are waiting for the retail sales news, and then we've got the big news, which is the Fed decision, and we've just had Bloomberg, and we've just had the ECB come out and announce a plan about a plan. Dropped US-30 and dropped cable. Well, could have done a few trades on that, but we didn't because we're waiting for this retail sales news. It's meant to be high impact, but to be honest with you, with what's kicking off today, it's probably not going to do. See, it's all about the Fed decision. It's going to go 75 basis points. Looks like the general consensus now, the biggest hike for a long time. Going to combat the inflation. Then tomorrow here in the UK, we've got the same thing with the Bank of England. So it's all about that. It's all about the ECB having this emergency meeting today to try and stop the fragmentation and stop Italy going bust. Spain is leaving the euro. Yeah, it's bad news out there at the moment. But this is a great time for us to take advantage on our true scalping, because to us doesn't matter. We're in and out, getting the pips. Pullbacks, reversals, against the trend, with the trend, doesn't really matter. Got our information, our news, got our indicators, and we've already had a great win today already on DAX, in the Euro Open and London, and we're already well in profit. So now, exactly, this is retail sales news in about 6 minutes time. Can actually make any difference? Not. Probably, if it's better than expected, it's aimed to be worse than year on year, not 2 month on month. Dated. But I can see if it's better than expected. US-30 still dropping. They had a great signal here. Look, a little breakout. Grabbed us tips. We had a nice breakout trend that grabbed us here. Price signal. They've been working really well. I'm not 100% believe in any kind of signal driven thing, but we like that trading system. Those trade with those. Price action, momentum. Yeah, we'll wait for this news. We've been tuned into Bloomberg about the ECB.
People are still betting against the Japanese central bank, saying that they're not going to be able to do this. But the reason why I'm referencing this with respect to the ECB is they have to be ready to deploy it. And then what do they do when it doesn't work anymore? When
I'll start to prepare anti-crisis tool. We're waiting for this. Listening, we could log into our broker.
The ECB going to be not necessarily in the same situation, but an analogous one?
We've got to see what the vehicle is and the details of that vehicle. This is a plan to
markets.
And then we'll see if that plan to make a plan is ultimately approved further down the road, and whether it addresses what's happening in this.
Today we're trading different accounts, but one of our accounts is about $1,500, another about $1,200. We've got our bigger accounts. So see what we can get. Already grabbed 10% account already today. Brilliant return.
Javier, we've heard from several politicians that are trying to make the
point
that they would like to see more refining capacity. They'd like these companies
30 for this news. Gold's the one you can trade if you want. I'm still including gold at the moment, but again, gold usually goes the way of the news result and then flips back up so on the open. Not always, but obviously that's kind of we look for it. RSI took
taxes, and at the same time telling the industry, please, can you drill more and can you build a refinery, because now we have realized that we don't have a refinery. At the same time, you are telling the industry we don't.
Good luck on the retail sales, see if there's anything. Like I say, we don't enter initially just straight on the move. We will wait
we are paying the price of very
for the
unfocused
result
energy
and
policy over the
see
last
what the
few
RSI is
years.
going to
The
do,
most
because it's
important
mixed in
point
here
today,
with
I think, internationally,
import
today
export
is
prices,
the first time
but
in
basically
2023
we're just looking to see whether we're
landscape that
going to
we are
get a
living
general
through is pretty
consensus
ugly. Oil
or
demand
bad.
remains very strong despite a cooling economy, and supply is
Just
not
of a note,
really
today's cable Asian trade for the team was a winner.
prices for the rest of the year.
Again, it's one of those close ones, but it was a buy. Could have been close for some people not to take it, but again, even if it's close like this between the two lines, you can say I'm looking for a buy and then wait. And here we had the break. This is where you could have got in on the trade, and obviously we're talking about 80p. So that was an day on cable. Those who took the trade, and
It's
now
very hard
pull
to
back
once
since we've
you
had
build
this
a refinery.
ECB
We have had
news.
expansions, but the biggest problem is over the last
Kind
few
of
years, we
suddenly
have lost
increased. We're
a
back to
significant amount of
120.
refinery. Worldwide, we lost the
21,
most refining
so
capacity
dollar
in 30
increasing
years
its strength
in
again,
2021,
120.
and that is going to
Could be
take time to
115,
address.
could be
And the only
110,
way
they
to
say.
address really the mismatch that we have right now between supply and demand is to
Keep an
lower
eye on that.
demand, and for that you need a recession.
We're focusing
And
on
that's the problem
30.
for politicians and the central banks alike. Bloomberg's Javier
Put the
Glass
set.
there on the energy market, and the energy market sparking a big problem for these policymakers right now. A bigger problem, I would say, for this ECB, Tom. What a challenge they've got to raise interest rates and cap what's happening in the bond market. Italian 10-year yields getting back to 3.93.
Yes.
Sales.
Down on the session in a big way, but
Thank you,
way
bye.
off the lows.
Well, you've got to watch those select group of bonds. I mean, I get that the Italians front and center because of size.
News will
maybe
kind of
because
override it.
Draghi, but
So it's kind of ECB versus the Fed. Which news? They really haven't done anything, the ECB. They've just talked about
coverage this afternoon.
what they intend to do, where the actual Fed is going to actually do the interest
Lisa, we'll have
rates.
a final word on what we're seeing taking place this morning.
It's pushing back. People aren't believing exactly what the ECB is saying. There was an expectation for something bigger than what was delivered. That is the message coming from both the moves that you're seeing in the Italian bond market as well as in the euro.
Lower the session on the Italian 10-year, 810, 376. Right now, about 15 minutes later, 393. That's the turnaround off the back of this ECB statement. Turnaround in the euro too. Euro dollar looks a little something like this. Positive 0.2%. It was much higher on that currency pair earlier. 104.36. Equities hanging in there, up 0.8% on this Fed decision day. More coverage still to come with Lara Rain of FS Investments from New York City. Heard on radio, seen on TV. This is Bloomberg.
Go. Morning, everybody in New York. Get ready. We are literally 46 seconds away from the news. Popped out on retail sales. Probably going to be better than expected. The way people have been spending, this is what they're saying. Obviously, inflation. Plugged into 30. Not below. Let's see what we get. There's no panic. Factory index. Well, expected it say. Up. Bite on price action 8 wait.
Neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a third dose is a must for it to successfully neutralize
Expected.
the variant. What we don't know is still that
Yes.
effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because
Car signal.
many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at because majority of the studies done, uses a small sample number, and most of the time when
Go there.
translate it
Print
to the world,
group.
the data changes. So it will be really good to look at
Red.
large-scale data of the ability of antibodies from vaccines.
So you're going to pull up on that.
Variant.
It's a fake
Great
out.
to hear today that
Look.
the virus Omicron variant still uses ACE2 receptor as its main
Trend line break signal, a break
all of the vaccines which are designed
pulse.
spike in mind still
Look at that.
imagine if he uses a different receptor other than ACE2, none of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what
1 minute left.
was already pricing.
Need to catch up?
Tiding.
Wall Street Week, I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
Could have got a win away, but better to wait for the major move.
That's the way you run good risk management. It's a challenging dynamic.
Trend line break signal, really bang on.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Second.
BSO Now is your online
Right on.
weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO sponsor Bank of America.
Second. That on. See if Bloomberg mentions the news as well. Still the neutral zone.
Scale of this Federal Reserve meeting a little bit later this afternoon. We got retail sales out any second now. Hardly been talked about anywhere.
46.
This morning, including on this network. Let's get you some of that economic data, shall we? Let's get Mike McKee into the conversation. Morning, Mike.
Good morning, John. Retail sales yet to drop from the Census Bureau, but the Empire manufacturing number is out, and it rises to negative 1.2 from negative 11.6, a little bit better, but still not great news about manufacturing. Import prices have come in up by 0.6. The forecast was for a 1.1% rise. Now, ex-petroleum, they were down 0.1. So that's a little bit of good news on the inflation front. Here come retail sales. The advanced number down 0.3. The forecast was for up 0.1, and last month it was up 0.9. So the numbers are not particularly good on retail sales because remember, this is not adjusted for inflation. Ex-autos, they're up 0.5%. That's less than the 0.7 that was forecast. And retail control, which is the number that economists watch, goes into GDP, basically is flat, no change at all. It was up 0.5% in the month of April, which is revision by 0.5% lower from the original 1% reported. So basically what we're seeing here is a pullback in retail sales. People not buying as much. Gasoline stations on the month up 4.4%. And 43.2% for the year. And some others are negative. Motor vehicles down 3.5%. Furniture down 0.9%. Electronics down 1.3%. And remember, that's inflation adjusted. So it does look like consumers began to pull back in the month of May.
Mike McKee, two-part question with a when and a how. When will this Federal Reserve be confronted with worse economic data than this? And how will they respond to it?
Well, that's the question. The 400 basis point question is how soon does the economy cool off and what are the signs going to be? A certain amount of it is maybe people pulling back because of inflation, but when do we see demand destruction? Is this a sign of it starting? We'll have to see, and then we'll find out this afternoon how fast they're going to move and whether they think they need to go, they won't say the word recession, but go restrictive.
Mike, you're going to be in that press conference. Is this retail sales, and particularly combined with the previous month revisions, is it enough to shift the 50 or 75 debate?
I doubt it, Tom. I think the Fed is focused on inflation right now rather than growth, and growth is strong enough. They've made that case over and over again that they can look past this. It's 1 month's data. We'll see if it continues. But that CPI report apparently did worry them quite a bit. And the University of Michigan numbers that suggest inflation expectations are rising is probably the overhang for all of it.
Mike, I realize we can't extrapolate out, but let's say we do, and this slowing in consumer spending persists for a number of months. Does this make the Fed's job easier or harder?
Well, it probably makes the Fed's job a little easier if it's accompanied by a drop in inflation. If demand destruction leads to lower prices, then the Fed does have the opportunity to back off a little bit. And maybe they go back to their plan of not necessarily pausing, but at least looking around and recalibrating how much they do each month when we get to the fall. Again, that puts a lot of the onus on Jay Powell's Jackson Hole appearance. But at this point, the Fed has got to fight inflation. And, when we're still over 8%, 8.6% on the CPI headline, that gets into people's heads. And they've got to do something about that.
And Mike McKee, can't wait for your coverage a little bit later. We'll catch up a little bit later this morning, too, ahead of that. Mike McKee, thank you. Something Mike McKee said there is so important. So headline inflation for the month of May disappoints, downside surprise. The previous revision, not great either. Tom, think about this, where inflation was and the fact that that data is not inflation adjusted.
Yeah, it's not inflation adjusted is key, John. And I really wait to the revision. And I really can't convey this enough, folks. You look at the screen and the red and the green blinky of the famed Bloomberg screen. I mean, it lit up like a candle there, John, as people responded to
That's weak
reports.
data, Tom. That is weak economic data.
Yeah. DXY out over 105. We're watching Euro again off the festivities there. Weaker Euro 104.31 in the last 2 hours. A perfect time to speak to Laura Rahm. She's chief U.S. economist at FS Investments. Today's phrase, Laura, is crisis tool. Europe is in search of a crisis tool. What does the acclaimed Rahm inflation crisis tool look like?
I think that the crisis tool is clearly just trying to reclaim some credibility.
It's just ranging around, still waiting. The RSI breaks the average line, we could buys, which would be right because it wasn't expected. And US-30 likes to go reverse.
I don't think it's even frustration
or the market
with some
open.
of the air
So
getting let out of
watch and
financial
wait on this.
conditions, but
Gets
they
broken.
want to try to calm
A
markets that they are
breakout
on
zone.
top of managing inflation and managing policy. And I think that is what has been so difficult, and that's why we're seeing central banks around the globe really, that's what they struggle with.
Laura, is 75 basis points enough to get the job done?
I think that the Fed, I think it's a step in the right direction because for the Fed, it's just, I think giving that impression that they are on it, they're data dependent. I think that they have suffered from this idea that they're going to wait several meetings to see how things flush out. That is gone. So there's a proactivity there, but I do think that we are
If not, no trade.
Data that is already
That's sometimes how it is.
several categories. The
Hey,
possibility that
want
they
to wait
are
for a
going to
firm
have
move
to,
before any kind of
really
position.
tighten into the face of weakening demand, and that I think is going to not help them at all.
Well, this is interesting because it's sort of the opposite of what Mike McKee and other people have been saying, which is it may help the Fed to see a cooling in the economic data because it indicates that perhaps not at this meeting or next meeting, but at the end of this year, they'll be looking at inflation trends that are more in their favor. What's your pushback to that narrative?
So, the issue is that Fed rate hikes just take a really long time to impact the economy. And I think when you think about demand destruction and where inflation is really coming from, it's shifted to now coming not from, auto prices, but really coming from rents. Areas
Still got 2 minutes left on this candle.
Much more sticky.
See, it's fighting. Look,
for that reason, you really
our
need to get
Asian baseline
housing
rising
not only roll
up,
over,
which
but
is a
housing
sign that's going
prices
to
to
up.
moderate more significantly. These are changes that don't happen overnight, and they're changes that really come with a wider implication for growth. So we've already got household sentiment under pressure. We've already seen households be impacted by inflation very negatively. The demand destruction is already here.
Well, what's the math here, Laura? If we get a 75 beat move, a 3/4 of a percentage point move, does the 30-year mortgage go up
retest again?
3/4 of a percentage point?
It's actually more
Taking a drop.
More than the long end has risen.
Really do nothing,
so,
or
I
still in the neutral zone.
Mortgage rates
Little
go
bit.
higher. We've already seen
But
the
they
housing market cool
look.
down. I think what we really are talking about is the connection between the economy, the labor market, and the fact
which
that
is the same.
the
It's
reason
against
the Fed
resistance.
has trouble micromanaging demand. You know,
Oh,
they
big
are
spike,
a
look,
broad sword,
sales.
they're not a scalpel. So for that reason, I think there's just more. This is the tip of the iceberg when you look at demand cooling. And I think you could argue that demand right now isn't even really cooling because of Fed rate hikes. It's cooling because of inflation. So you look at the rate hikes they're making right now, that's going to impact the economy in several quarters. So they're really tightening aggressively into an economy that's already slowing.
So what will the confused rhetoric be of this central bank after the press conference today? We've covered confusion in ECB today like truly we've never seen. Are we going to be as confused?
I don't think so, because I don't think they're going to change their statement very much. I do think that in the press conference, Powell is going to continue to sound very optimistic about the Fed's ability to
We get
create
another
a
trend
soft
line break
landing.
signal, which could
But I
be
think he
pushed
wants
down.
to really strike
Good.
a very serious tone on the inflation front. I think it'll be interesting to see how, you know, if we get another month of an upside surprise of inflation,
Trend
what
lines,
this means for the
any
July
sells
meeting.
until the price is
These are
broken
things that I think, you know, just how sensitive to month
buys,
data they're
obviously.
going to be. Because,
Needs
you know, the real,
same time.
I think now piece that we're waiting for is to see
Please.
how the employment market
Forming a double top.
That to me is really going to make or break how aggressive
That's
the Fed can
52
be.
now.
Markets have, you know, priced up the whole curve. They're now expecting the Fed to raise rates to 4% by the beginning of 2023.
Laura Rain, thank you, of FS Investments, looking ahead to the Federal Reserve. Not just today's decision, but the summary of economic projections as well, and an update to that dot plot. I'm going to catch up with two of the best. We're going to catch up with two of the best in the next hour. Lisa Shaddett of Morgan Stanley Wealth Management, Bob Michael from JP Morgan Asset Management. TK will do that in the next hour on Bloomberg TV.
I look at this, John, just absolutely extraordinary. I can't say enough, folks, how absolutely unique today is.
And again,
there's no other way to put it, John.
Yeah, Lisa, this afternoon, a Federal Reserve and an unexpected central bank meeting this morning with the ECB.
Laura Raim highlighted it really well, hiking into weakness, and that is the theme across the board. When do we start talking about stagflation, and what does the bank do with that? I mean, the central banks, that is their nightmare, and that seems to be more of what we're looking at, but it's moving so quickly, and it's getting harder for economists to really get their hands around what to expect in any monthly data.
John, the thing I would say here is all we're left with is price.
Up.
And price comes in many ways, including
Brilliant. We're in and out. Yes.
One price indicator.
That move there.
Right now, I've got a modest and fragile pennant
Nice.
on euro at a 104.32.
3 positions on that.
Ramifications if that breaks down to weaker euro are incalculable.
Futures right now up 0.8% on the S&P and the NASDAQ 100 up by 1 full percentage point. We'll guide you through that Fed decision a little bit later this afternoon, 1:30 Eastern Time. Tom Keene, Lisa Brammitz and Jonathan Ferro with a Bloomberg Surveillance Fed special a little bit later from New York.
In the day as we hit our zone, because waiting.
Is Bloomberg.
If I creep up, if right, so that was the kind of little move. It wasn't a massive move. Took the buy and got the green and got out. Good. Okay, now we'll wait to see if it's higher or whether we're going to trend line. Everyone's been right, so they down. There we go. Broke the trend line. Look, excellent. One form. We've got a wedge now. Going higher.
We don't think it's woke. We think it's part of like a very
Breaks.
important part.
Points of interest.
The opportunity set and the risk set of 5,000 companies.
Is that to say there's alpha in ESG or alpha in sustainability?
Yeah, absolutely.
You believe that?
I believe that.
Move 61. Buy.
Competitive industry. The UK has cancelled its first flight deporting asylum seekers to Rwanda. The European Court of Human Rights blocked the deportation, saying there's a risk of irreversible harm for the asylum seekers. The government says it is trying to discourage the work of human smugglers, but the policy has been condemned by UK rights groups and some lawmakers. Bill Gates has dismissed cryptocurrency and NFTs as shams based on
Brilliant, and some more wins there. Yay.
At a climate conference, Gates said digital banking
The wins.
by his philanthropic foundations are hundreds of times more efficient
Eyes.
than Gates' hard with Elon Musk last year.
And that's all done.
Too risky for retail investors.
Only enter a couple of times on each kind of news event. Follow this, but as you can see now, we're right in this zone. Here's a breakout trigger. Our support and resistance. See, we're heavy resistance, so it's a dangerous zone. See what happens with the next candle. But worse than expected. It's good that US-30 goes how we predict. The news, as you can see, was predominantly red. Yes, it was up year on year, but everything else monthly was down. So move and just kind of waiting. That's what you got to do. I tell you, there's so much where you want to get in early, you want to jump in, like we used to do when before the pandemic, and during initially. You could do that. Now you just can't. So you have to tailor your system and strategy. Trading system is now improved as well. Good idea. Price action levels.
When you think space, you probably think one space agency that travels under the radar.
10 minutes until we've got the old 2 PM blip, as I call it. Half an hour before the book opens, where they'll kind of move. Fine. Then at by open, followed by the housing.
ESA wants to be a leading force in furthering humanity's mission into space.
Out.
If we want to have a successful human mission,
Sales done.
we are going to have to learn
Housing market.
off-world in a different way.
Yeah, end of our streams. Again, we just tend to trade around the opens. 30 minutes, 15 to 30 minutes on the euro, 15 to 30 on London, and about the same on the US. And that's all you need to do. You don't need to be stuck at the charts or pick the zone where the market moves the most. This setup you can through scalp. And like I say, there is a stop loss, but I'm not setting it because I don't need to, because I'm getting my profit before I even have to set a stop loss. The market moves, I'm in green, and my profit off my trade manually. Like that buy here, for some reason it's port zone, I'd end the trade, but I would put all that as it bounces off the trend line.
When you think space, you probably think
Let's see if we're going to break this level.
one space agency that travels under the radar is ESA.
By 63, so still got some to go. It was actually enough hours.
Surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
Go prices hit our resistance. If you're in the buys, you'd be getting out of the buys now.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have a successful human missions to Mars, we are
It's nice when it hits a distance and the RSI is overbought or oversold, then or conviction that you're going to get a river or breakthrough. Careful of that.
Help humanity take its next giant leap.
Stocked early enough.
I'll be looking for sales now on your 30.
And we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
306 back.
People have just been calling this peak of inflation. We say you can't call a peak until the peak is over. People
Right, there's 9 second candles, the crucial one. Next candle, D54. Why is it going to break? Or
that they are going down.
This conversation got a real buzz yesterday out in the zeitgeist.
Wow.
Kaminsky, she is with Alpha Simplex. And for those not in the know, this had to do with turtle trading and trend-based trading. It was a clinic on trying to find peaks and troughs in a market. We're going to do that right now.
Backed off the heavy
Begin with a
resistance.
climb
It
to the
hasn't
chart.
closed above that
Joining us,
zone.
Kriti Gupta on
Breakout
liquidity
zone and the heavy
I'm
resistance
stepping
going
on
together. They
Lisa's toes
see
here a
the
little bit. I'm
line.
going to try to do this concept justice.
So,
like to keep her on her toes. This is a
see
really important concept because as
do.
we talk about higher volatility, you got to talk about the liquidity as well. And that brings me right to my chart of the day. Looking at a Bloomberg index that measures the trader's ability to execute deals without affecting the price. For our radio audience, the line just goes higher and higher and higher over the last few months. Now going back to levels last seen in March of 2020. Remember, the market was not functioning then. And it's not just something you're seeing in the chart. It's something a lot of these banks are actively talking about. Morgan Stanley saying that the liquidity in some shorter term U.S. Treasuries are flashing warning signals. And unlike in 2020, the market does not have the backstop of central banks, that according to an internal note to clients. So once again, this is very much a part of what people are talking about. And remember, today is day one of QT, the idea that $15 billion of maturing treasuries, well, they're not getting reinvested. What happens when that scale increases more and more?
And wrapped around an ECB and Fed joint meeting, it appears to be today. Kriti Gupta, thank you so much. And Lisa, this really comes to the heart of the matter, which is the trust within short-term paper.
And
So
I will just say for the
66.
record, Kriti, you are never stepping on
Not
my
a kink
toes.
down
I'm glad
yet,
you're
so
highlighting
the
important
stochastic
points.
still
Because right now
up as well.
liquidity
So
is one of the
no
main
trade, just
concerns that a lot
wait.
of bond traders have. Among them, Ira Jersey, chief U.S. interest rate strategist at
NAS
Bloomberg
got
Intelligence,
up
who's
as
been
well.
covering
Look,
the bond market and watching it
buy
for
on
decades.
NAS in the end.
Ira, how poor
Dead.
is liquidity in the biggest, most
Focused
liquid
on
market
that.
that is thought of as completely safe and is trading like Bitcoin?
Well, firstly, it's not. I would argue that it's not trading like Bitcoin. But in terms of liquidity, it's certainly the worst liquidity we've had since the global financial crisis. And we
Got a
all knew
re-entry
that
coming
something
up
like
on
this
NAS. That's
was
pretty
likely
good.
to happen, primarily
Break that heavy
because
resistance
banks
zone.
don't have the ability to, and dealers don't have the ability to intermediate the market the way that they used to, because the size of the market has grown exponentially over the past couple of years, and at the same time, the dealer balance sheets haven't been able to expand. So financing trades and the way that plumbing all works has just not grown, and has actually gotten worse because of some of the regulations that have been placed into effect to try and make banks safe and sound. You're now making their ability to intermediate markets less possible.
Ira, on a high level, kind of conceptual basis, can you give us a
NAS,
sense of
wait for
what
the next
happens
move.
when the system gets gummed up, when some of the trading stops in the same way that people have become accustomed to?
Well, what it really means is that it used to be that a bank or even a hedge fund was able to buy a bond and then finance that via the repurchase agreement market. And the repurchase agreement market is what SOFR, the LIBOR replacement, is made up of. And it's a huge market, right? It's $1 trillion a day, more or less, trades in that market on an overnight basis.
For that.
But the problem is that $1 trillion
Wait for the
is
break.
the same size as it's been basically for the last 20 years. And meanwhile, the market's gone from a couple of $1 trillion. The Treasury market's gone from a couple of $1 trillion upwards of $20 trillion, right? So that's grown 10 times. So what happens is when a dealer buys a bond, they have to be able to finance it somehow. And if they can't finance it, then bid offers widen, and that's one of the things you're seeing in the liquidity index. Or they have to go out and find another person on the buy side to take it from them, and that means that they have to move the price probably. So that's I think one of the big reasons you're seeing the size moves that you're getting. I'm not surprised by the level. I'm just surprised by how quickly we're getting to some of these levels, and that's where the liquidity situation is showing itself.
Ira, a most unusual day. This emergency European Central Bank meeting, and clearly the observation is Europe is different. Europe has bonds, many more bonds on a relative basis. How do you expect bond prices to react and respond in Europe as they go in search of a new crisis tool?
Yeah, so it's really, will we get the periphery spreads down? Like, I even think in Europe, they don't mind yields in general going up, but it's more, again, the liquidity magnitude and the spread for some of the sovereign countries over there that's going to take precedence, and the reason why the ECB felt it necessary to have this emergency meeting today. But it's also not a major surprise, just given the liquidity situation there as well. And you see the fragility of something like the Eurozone system, because even though you have a single currency, you still don't have a single fiscal structure, right? So one of the advantages that the United States has, and and Japan and some of the other large sovereign bond markets is you do have a very homogenous government fiscal system in general. And I think it's going to be more and more difficult, especially in times
NAS,
of
bounce
stress when
a bit
markets are
lower.
falling for
Or a size 68, come out of that zone, so it's a nice sell at the top there.
with the core.
What we're really talking about here, Ira, and again, folks, into our coverage this afternoon, is people arguing about who's going to take the loss. Who takes the loss when bond prices go down?
Yeah. Well, I mean, everyone does, and the taxpayer ultimately does in the United States because you have to pay higher yields to finance deficits and to refinance some of the maturities that are coming up, and that's especially true now because today is QT day, so today is the first day that we have maturities of Treasury securities.
30, whereas 30 again also backed off. That zone didn't break above it. It's in a bit of a range now. It's just going to wait for the RSI to dip back in the neutral zone for a sell, or wait for it to again. But see now we're 3 minutes away. It'll blip. We might get a little bit of a move. In a range now for the next 30 minutes till the open, and then see nice big M pattern forming.
That's the point, right? Look, when you look at what the market's pricing right now for June CPI and for July CPI, we're talking about 9% CPI prints the next 2 months. So, Tom, that's something that central banks and the Fed in particular, I think at this point really want to try to get in front of because they're already behind.
Ira Jersey, thank you so much. Greatly appreciate it. And Lisa, that goes to the resiliency of oil. Brent crude to the 120 handle moments ago, printing 121. Is it 124? No. But certainly the idea of a pullback in hydrocarbons just simply hasn't happened.
It hasn't happened. I just want to note, heading about 35 minutes to the opening bell in New York City, that we are seeing a further lift, a real build on some of the strength that we saw rebound or trying to have a bit of a bounce ahead of the open. And it really comes the extra leg on that weaker than expected spending data and as well as Empire Manufacturing for the month of June. Tom, this is significant. People are viewing this, at least in markets, as possibly a ray of hope for the Fed, that there's already a cooling in the economy that will allow them to not move as fast, as far. Whether that's borne out and what they say about that today will be interesting.
Give me an intraday chart on the way out, guys. We got to do this differently. Euro, right now, there's only one word. Plunging, dramatically weaker euro as we go into the next hour. What an eventful, historic day. Our Fed coverage this afternoon.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Okay, we just topped up our coffee there, and we're just watching NAS now pull back from that resistance look. Let's see if it's going to break this zone, like it's going to do. Down, got 1 minute left on this. A nice breakout zone there. Back, bounced off that resistance like a ping pong ball, pointing red as well. RSI just kicking back a little bit. Good. Yeah, it was a nice move. It was a great bounce that was off that. It was a great sell at the top there. Bounced back perfectly. See, a dip on our breakout as got 30 seconds left on this candle. See. Put some sells in if there is broke here. Sell down to our baseline. Little pullback, nothing more than that.
For the start of US trading. This is Bloomberg, the Open, with Jonathan Farrow.
No, there's the down. Look at this.
Live from New York City, we begin with the big issue. One number on everyone's mind.
It's absolutely necessary to move to 75.
We do see 75 basis points.
Yes, they're probably going to go 75 basis
75.
points. We could do more than 75.
75, 50. For me, it's a flip of a coin now.
Our call is for a 50 basis point rate hike.
If we get less, the market might actually react to the downside.
3 options for rate hikes: 50, 75, or 100.
The Fed has to basically choose between high inflation or kind of recession.
Inflation is really the Achilles heel of risk markets.
Obviously, the market reaction has been aggressive.
At this stage now, given the market reaction,
The damage has been done.
You have to think about further out. What's the guidance? What does the dot plot look like?
The Fed is in a really complicated position.
Joining us now to discuss all-star lineup, Morgan Stanley's Lisa Shallett, JP Morgan's Bob Michael. Lisa, first to you. What are you looking for later this afternoon?
We're in the camp that says it's going to be somewhere between 50 and 75. I mean, look, Powell really has backed himself into a corner by saying 75 was off the table. And, so the minute he does 75, he's going to be questioned about, what it is that the Fed thinks they know, when do they know it, and how data dependent are they? I think some of, the
Brilliant.
commentary leading into this,
Grabbed a nice little sell there. We got 29, 29, 41, and 44.
75,
Beautiful.
and if not 75 today, certainly a couple of 75s.
Nice thoughts on NAS there.
So this is a market where a lot of the hawkishness is priced in, and my expectation is we actually get a relief rally here as Powell comes out very, very hawkish.
Bob Michael, do you share that view?
John,
Now we'll wait for the open.
going pseudo-Shakespearean on you.
Unless we get red RSI now.
They deliberately put out their 75 basis
Our coffee up again.
They've now had about 3 days.
That was nice. Yeah, we got a sell at the top of the heavy resistance. We got what? We've got the buy on the news, buy on the break here, the sell on this, and then a sell again on the break here. So very good if you took that.
And they're set to, according to Goldman, according to Mike Feroli and the investment bank at JP Morgan, according to Jeffrey, SocGen, Wells, Deutsche Bank. I can go on and on and on. The amount of banks that are calling for the same thing. Bob, here's something I've noticed. I would love your input on it. Let's take Goldman as an example. They wrote the following. We've revised our forecast to include 75 basis point hikes in June, again in July. That's what you want to see. This would quickly reset the level of the funds rate at 225 to 250. The FOMC's median estimate of a neutral rate, we then expect a 50 basis point hike in September and 25 basis points in November, December for an unchanged terminal rate. Now, this is what gets my attention, Bob. I'm hearing 75. I'm hearing 75 again. But all I see on Wall Street at the moment, Bob, from the economists, they changed the timeline, but not the destination. What do you make of the latter point?
Let's listen to the Fed and look at the infamous dot plot. Right now, there are
You need to
275 basis
break this
points
zone. We've got a
of
little
rate
zone.
hikes priced in from now
Flip
to
to
year-end. So
US-30
that
and have
puts
a
the
look.
Fed funds rate at that range of
Then he's
3.5
doing the
to
same
3
pattern, a nice
3.75%.
pullback. Again, you could have
That looks
sold at the
reasonable
zone
to
here.
me. It
So
feels
retail
as though
sells
the
came
Fed
out.
believes that its best shot at a
Still,
soft landing
this
is
trend
to
might
front-end
still
load
come into
the
fruition
rate
on the
hikes,
open.
much
Break the
as what
trend line, and we're
happened
down
in
to our minor support
1994.
level.
That's their
Enough
plan.
pips there.
In a few hours, we'll
Look at that,
see
perfect.
whether they agree with the market pricing.
Fantastic.
As I
RSI
said,
is just in that
is it
neutral
gift
zone. As you
to
see, the
them
candles are
to take
synced
that
with it.
market
So
pricing
don't
and
do
validate
on
somewhere
that basis.
between 3.5 to 4% over year end.
Elisa, I'd love your view on this. Has the destination of this Fed changed for you? We understand the pace of the journey. They want to get there quicker. They want to front load. Bob's talked about that. Has the end point changed? When the Federal Reserve and the fund rates peaked, has that end point changed for you in the last couple of weeks?
I do think that it has. I mean, I think that there has to be an acknowledgement. And I think that increasingly there has been, whether we go all the way back to Janet Yellen's admission that, from the Treasury perspective, she made a mistake, all the way up to, the Fed capitulating and saying, yeah, this idea that 75 was off the table was silly. So I do think that inflation is likely to be higher for longer. There are a lot of structural cross currents at play here, and that means that your terminal rate does need to move up, even if you're trying to get there faster.
Futures right now up 0.9% on the S&P, on the NASDAQ 100 up by 1.2%. You're familiar with the moves of the previous 5 days. 5 days lower, over those 5 days down by more than 10%. Brutal. A little bit later this afternoon, you get a Fed decision at 2 p.m. Eastern Time. 30 minutes after that, you get a news conference with Chairman Powell. In that news conference, Mike McKee. Morning, Mike.
Morning, John. I'm going to pick up where Bob Michael left off and say that comes now the summer of the Fed's discontent, if we're going to do a little Shakespeare, because they don't like the inflation numbers that they're seeing, especially the idea that inflation expectations are becoming embedded, which leads to this change from the 50 to 75 basis points move this meeting. And as you can see, we've priced in another 75 for July. So the markets are giving the Fed permission to do it. Do they go ahead? Well, the questions we're going to be asking today, and the markets are going to be asking today, what qualifies as a surprise, and do we get one? Would 100 basis points be a surprise? Would 50 basis points be a surprise? Lisa said if we got 50, the markets would be disappointed. What's the terminal rate now? You brought that up, and how long does it take to get here? It does seem that their strategy is now to front load. And what's their unemployment rate forecast? That'll give us an idea of whether they think they can get a soft landing in place. It's going to be a read between the lines number, because they aren't going to say a recession is out there. But do they think that they can really keep the unemployment rate below the 0.5% that brings the Somme rule and recession into play? We had retail sales earlier today. You could see how much gasoline is eating up and groceries eating up in terms of retail sales, but they did fall a little bit despite the rise in energy prices. So is the Fed already tightening into a slowing economy? That's another question they have to judge today.
And look at these companies. Compass cutting 10% of the workforce. We had a report yesterday, Warner Brothers reporting 30% of ad sales. That sales force could get cut. That was a report, according to, I think, the information on Warner Brothers. Mike, stand by, because Bob Michael often likes to offer you advice on what you should ask in this news conference. Mike McKee, I'm going to get that view right now. Bob Michael, can you tell Mike what you think he should be asking in that news conference a little bit later this afternoon?
Yeah, he should be asking if they're satisfied where financial condition indicators have gone. They've tightened a lot. They've done a lot of work for the Fed. There is a view that that's one of the things the Fed wanted to enforce by going to 75 basis point rate hikes, to have the markets start doing a lot of the work for them while they're on this journey to something that's more reasonable.
And Mike McKee, I'd love your response to that.
Well, I think Bob makes a very good point, and it is something we can ask Jay Powell. I've heard this from some analysts that the Fed is not looking so much at the rates, even though they have to put out rates in the dot plot, et cetera, as they are at financial conditions. And financial conditions have tightened a lot, and that may be already starting to have an effect. We're seeing it in housing, we're seeing it in autos, and maybe we're seeing it, the very beginnings of it, in retail sales.
Mike, thank you. Mike McKee, we'll catch up a little bit later and ahead of that news conference later too. Mike McKee there of Bloomberg, down in Washington, D.C. ahead of that Fed meeting. This is what Bill Ackman had to say out on Twitter yesterday. He said the following: the Federal Reserve has allowed inflation to get out of control.
Nice push down, like you see, he's trying again. Push.
Market confidence can be restored if the Fed takes aggressive action. Lisa, I want to come to you on that because you made that point about 8 minutes ago. Can you
And you just don't want to take a risky sell,
hawkish enough,
fix the trend line, that's what signaling
equity market, and
potential. See, most of the time you can backtest these, they're really good. Obviously on this one, but it came out, the news came out, it didn't happen. Still, worse unless we get a new signal. If we get a new signal, this will disappear and we'll get a new one. We're still pushing up, still buys, news, that's now green, and RSI is just about the 59.
I think, to the point that's been made, if the Fed does not,
so we're only 50 minutes from the open, so I'm not going to put more trades in.
75 talk about their willingness to continue to be very aggressive, very much, channeling Volcker. I think that this credibility gap it becomes even bigger, and I do think that we suffer to the downside, unfortunately.
But what's your take on the same topic? We've heard a lot about what people expect. I've heard little about how they think this market will respond to it.
It comes down to one thing. When the Fed is raising rates while unemployment is going up, then that's going to tell us how hawkish are they intending to be. Where is inflation?
I just said, look, there's the new signal. Hey, so we could get another break, you see. Great, I love seeing the
3 or 4 months of rising unemployment, but inflation is too high.
See.
Let's say in a range of core inflation measures, it's above 4%. Do they continue to hike at a very rapid rate? I think that's when you have the debate about being too hawkish. Right now, today feels to me like it's another classic version of sell the rumor, buy the news kind of stuff. And I think that's what we're going to see.
We'll keep building on that, Bob. I want to know what you've been buying as well. Bob Michael, Lisa Shallett, sticking with us. Equities up 0.9%, breaking down the movers going into the open. Here's Abby.
Good morning, John. Yes, we do have a bit of a firmer tone to markets this morning ahead of that Fed meeting. And a piece of it, of course, has to do with big tech and the discretionary sector. Both Tesla
next news is 45 minutes away
sector, which
after
interestingly
the business inventories and the housing market.
Relative to Tesla, there's also some interesting news out, which is that
Keep watching this US-30 and see if we get a break.
System-involved crashes. This, according to the U.S. National Highway Traffic Safety Administration, 273 of 367 such crashes
Doing stocks, says you market movers.
Between July of last year and May 15th of this year. Too limited to draw any safety conclusions, though. As for this morning's rally, it's pretty broad, going beyond tech and consumer discretionary into the banks. Bank of America up 1.2%, and the travel trade finally getting a lift over the last 5 days, John, into today. Extraordinary declines, more than 25% for some of these airlines. But today, Delta Airlines up 1.5%.
Abby, thank you. Coming up, the ECB holding an emergency meeting.
They really have a fine line to walk. The ECB, rightly in my judgment, has now pulled forward tightening, but they have this issue in terms of the integrity of the euro, peripheral spreads.
The ECB has a plan to come up with a plan. That conversation.
We got a plan to have a plan. It still didn't happen. That's why you should never take the sell till you've got the confirmation. So but we'll leave this. I'm just going to go and top my coffee up. Back in a couple of minutes, team.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering,
and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question. Great question. Great question. Great question. Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
They really have a fine line to walk. Different economies, different inflation dynamics. The ECB, rightly in my judgment, has now pulled forward tightening, ending quantitative easing, being pretty clear that they're on a path to tightening. But they have this issue in terms of the integrity of the euro, peripheral spreads.
What a difficult one. A tough needle to thread, if you will. This ECB with a really strange meeting this morning, an emergency meeting which concludes with a plan to come up with a plan. The Council decided to accelerate the completion of the new design of a new anti-fragmentation instrument for consideration by the Governing Council. Yields are down aggressively in Italy. We can get to Maria Tadeo for a little bit more. Hey, Maria.
Yeah, Jonathan, and can I just say, you think it's going to be an easy day at work and you find yourself in a full-blown emergency meeting. But Jonathan, a number of things here. When you look at that statement, of course, they commit to this reinvestment of the PEP. We knew that is what was always going to be the case. But I think the real takeaway, of course, is that line to say we will instruct the completion of this new tool. Now, a number of things here. Jonathan, one of my best contacts told me, and I think this really encapsulates the situation very well. The European Central Bank today is saying what they should have said a week ago. When you look at the statement, overall, it doesn't give you any reasons to buy, but it doesn't give you a reason to sell. And if you're the Italian central banker today, that's probably good enough. Now, the other thing that to me is very telling is the timing of this meeting. You know, this isn't happening in the move of around 250, 230, 70, approaching 300 basis points in BTPs. When Mario Draghi said whatever it takes, it was a full-blown crisis. So this does give you an idea of where the pain threshold would be for the ECB. And fundamentally, and this to me is the big question going forward, is when this tool finally gets agreed, and we don't know the timing of it, we don't know the details of it either. However, what is the quid pro quo? Because this is how Europe works. They agree to something, they agree to this tool, but what will be the condition or the conditionality for this tool to be applied? And that to me will be the real question going forward.
Maria, I'll give you something else to worry about. Abigail Doolittle, here's a headline from Gazprom.
There is certainly a headline, and Gazprom is halting one more compressor, squeezing flows to Europe. Gazprom, of course, is a Russian-majority, state-owned multinational energy corporation, and their gas exports, John, have tumbled to the lowest since at least 2014. So this, of course, means that the supply of natural gas to Europe under siege, and not surprisingly, the price spiking on this. European natural gas on the session spiking 12.39%, and that is on top of the 28% gain yesterday and on top of the 5% gain below that. So my math, if I do it very quickly, up more than 40% in 3 days, not helping out this inflation situation for Europeans at all, John. Again, the headline, Gazprom is halting one more compressor, squeezing flows to Europe.
Europe stuck between a rock and a hard place. Abby, thank you to Maria Tadeo as well. Bob Michael, Italian 10-year 377, down 40 basis points or so on the day. Do you like that there? Does that make sense to you?
I do, and two things come to mind. The first are central banks think the repricing has gone far enough. they're starting to respond to what they see as stresses in the system. And certainly for the ECB, it's looking at Italian debt. We expect overnight to hear something from the Bank of Japan on their yield curve control targets, because the 7-year futures has gotten out of whack with the 10-year yield control. So watch for that. The second thing that jumped out at us is we think the ECB missed an opportunity here. You have an emergency meeting. You're miles behind where you need to be with rates for where inflation is. Why not also raise rates 50 basis points? So announce two things. One, you're going to support Italian debt through whatever you're
Okay, team, we're back. We're topped up. We're ready for the final 30-40 minutes of our stream as we go into the New York Open. As you can see, again, false signal still. Obviously, this is suggesting that there wants to be some kind of pullback. Stop. This hasn't happened 2 times. It's tried now. And obviously, with the news being worse than expected, I usually see US-30 go in the reverse until the Open. This could be at the Open, we get the drop, you know, back down to 30525, or we're going to break above our zone and we're going up.
Yeah, I mean, look, we're continuing to try to be constructive here, but we have become more concerned over the last bunch of weeks. You know, as Bob alluded to, that the ECB may be, you know, a little too late. You know, what is it that they say? You know, never let a good crisis go to waste. And
I like that.
Especially
Never let a good crisis go to waste.
The emergency meeting, but now you've
That's so true.
From, the incentives
Traders
for Europe to unify behind an anti-fragmentation strategy and really
articulate NY Open
for the periphery markets.
Come back to here.
Well as, you know, signal to the EU that now is the time.
Yeah, so I'm actually going to put 2 lines in just
a path around fiscal, you know, support. You know, if I were Lagarde, I would be a lot louder and a lot more specific.
There's some real stress emerging here, and Bob, you've touched on it. And then I look at high yield spreads at about
confuse everybody. 2 in there just so you can see what I mean. There's,
Bob, a number of months ago,
I don't know whether it's going to go higher or lower. Use market manipulation, you know, collecting stop losses, usual kind of stuff about prepared to go either direction.
Really that wide at all?
No, no, they're not. They've held in incredibly well, given what's happened to pretty much all the other markets. If you go back to the March FOMC meeting, high yield spreads were about 425. If you just go back a month, they were about 500, so they're actually still tighter. If you look at investment grade credit, spreads are about 115 basis points. You go back to March, they were 155 basis points. So there's a couple of things going on.
Wait for that move, remember.
With the credit markets, if you look at high yield, 6%
could hit this heavy resistance and break above it. We've got a little zone here, look as you can see. Or we could go the way of our trend line signal and break the trend line and be a sell. So
funding over the last couple of years. It looks in good shape.
Like this is the way you've got analysis set up, listen to the news, you know what's going off. Some manipulation. Price just on direct off the bat, it will clear out people pending orders. 5 minutes to go, and then say 15 minutes. 30 minutes got the entries and the housing market index, which is cool, a bit lower, both lower, but they're only medium impact, and this could be what we're going to open. Not going to worry with the crude oil and the gas at the moment, danger zone, and then obviously we'll be back later on.
As we've talked about many times, you know, the
market
cap skews,
markets will 100% move, fly, gold, it's going to fly around with this rate decision. So 1.5, no, it's going to be 1.7, could be 2, who knows. It's going to be a crazy thing to trade. So just be careful for those you do. If not, sit back watching ride is what I say. You know, you learn by watching. If you don't trade it, or you would go on demo even
Those are
to,
all
you know, have a
trading at
practice.
recessionary type valuations, and we think that
That's
there's
it. Everyone's
really good
waiting for the
values there,
Fed's
and
next
we're stock
move,
picking right now.
including what we
Lisa
do.
Shaw, Morgan Stanley,
All
Bob
related.
JP Morgan. Bob, you've got about 10 seconds, Bob. Squeeze it in.
Okay, Lisa, the top of the capital structure is open for you. Leave the bottom, come up here and join us.
Bob Michael, are you trying to drum up business on this show?
We're doing that too. So just so you know, we've been buying credit as well.
Lisa, Bob's just trying to make markets. That's what he uses my programs for. Don't worry about it. Lisa Shallett, Bob Michael. Bob, you're naughty. Coming up, the morning calls and later. Nick, seeing opportunities within growth stocks following a monster sell-off over the last 5 days. Your opening bell just around the corner from New York. This is Bloomberg.
There we got onto the final candle. 3 minutes to go. Sort of a nice pullback. Is a bounce though. Won't be doing any trades around the open. Want to trade it? Don't trade it. Seconds.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet.
To go.
SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Equities trying to bounce back from 5 days of losses with positive 1%. Here are your morning calls. Wells Fargo upgrading Spotify to equal weight, seeing a legitimate path to profitability. Atlantic Equities downgrading Robinhood to underweight, expecting recent volatility to weigh on trading volumes. And finally, Morgan Stanley cutting its Apple price target to 185.
Go, 40 seconds.
Turning more cautious on spending. The stock is up by about 1% in the pre-market. Coming up, Nuveen's Brian Nix seeing opportunities in stocks, even in a mild recession. That conversation next. Your opening bout just around the corner.
In, let's see what we can do. Oh. Up. Brilliant. Yes, all done. Oh, beautiful. Nice buys there. Well done. Well done. Look at that kink up on the RSI. Irresistible. That's what you have to do. Broke. Is it going to hit that by line TP? That was good, and that was done in basically, oh, how many seconds was that? 20 seconds. We took 4 positions and all winners.
You probably think
that's true scalping.
one space agency that travels under the radar is ESA.
That was on our smaller account at 1200 and we still bagged
considering what the European space
about 150. Man, more than 10%. Yeah, this is feasible. Now it's pulled back.
Collaborated with pretty much everybody who
See if we can again.
space exploration.
The ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to
Nice.
live and work off-world in a different way. The
Who's
place
going to
that
push
we are
up
going
anymore?
To do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now,
Beautiful. Yeah, and we've got some more on the bigger account as well. Yeah.
in the command line.
Good. We've got nice 4 positions there. That will do, team. That's all you've got to do.
Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
But look at the price action. Look at that candles move. Break that. See if we get a reversal now.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Get rid of this one.
Easy to get wrapped up in
Well.
the drama of the moment and forget where you've been. 5 days, down more than 10% on the S&P 500. It's a monster move. We're bouncing back a bit, up by 1% on S&P 500 futures, on the NAS100, up by 1.28, on the Russell, up by a little more than 1%. There's your opening bow. Will it stick? Switch on the board and get to the bond market. Speaking of moves, your 2-year yield this time last year was in at around 20 basis points, right the way through 3% over the last week, up 70 basis points over the last 5 days coming into today's session. The 10-year absolutely flying recently too. It comes in 10 basis points, taking the smallest of bites out of the move we've seen so far. And in the FX channel, I have to say, out of everything happening right now, this is fascinating. Euro dollar 104, cable sterling against the US dollar in at around 120, and seemingly nobody wants a weaker currency this time around. Not everyone can have a stronger one, and right now it's all about dollar strength over the last year so far.
Beautiful on the
Let's
open.
across asset price action. Let's get you some single names, some movers. Here's Abby.
Well, we certainly do have a nice relief rally here on the open, John, with yields in sharply ahead of the Fed. It seems to be fueling some risk appetite on the part of investors. Tech in particular is higher. Apple up about 1%, of course, the heavyweight to all of the indexes. And the S&P 500 right now on pace for its
Buy
best
that
day,
bottom.
in almost
Gonna
2
buy.
weeks.
Always
Very
buy the bottom.
impressive. You also have
At the
bank
top.
higher up
Been
1.2%.
crazy about that.
Down, but the yield curve is steepening, so that's helping out banks. Now, of course, we had that weak discretionary number, retail sales number, excuse me, for the month of May, coming in down 0.3% versus a survey of up 0.1%. And last month,
Wait for a break now.
up 0.9%. So inflation clearly.
We're a size 64. Stochastics green, so they're synced. Let's see if it breaks above our heavy resistance now. Add a spike above. If it go, we can go again.
So some wobbly action there. And of course, one of the strong areas, sporting goods. You see Nike, which would supply to some of those sporting good stores.
1 minute to go.
0.7%. Overall, a very strong start here for stocks, John.
Abby, thank you for now. 1 minute and 40 seconds into this, we are positive by 0.9% on the S&P. Information technology near the top of the pile, up by a little more than 1% on the West Coast. Ed Ludlow
Nice
joins
move.
us now for more. Morning.
Nice open. Wish it was like that all the time.
Nice to see you. Happy Fed day. We're up 1.2% on the NASDAQ 100, around 1% on the Philadelphia Semiconductor Index. 2-day rally as it stands in that technology sector as yields, as you pointed out, kind of taking a time out in the moment. But you look at that move on the 10-year yield, and that's the story and the pain that we felt in the technology sector. We started the year talking about a conversation where higher rates discount the present.
This hasn't made the real move yet. You know, some people won't have traded yet. That's fine. You wait for the move. Want to do the micro scalping. It being low wants to break that resistance zone.
Look at the bull run in technology stocks, and then
Is it going to bounce and smash through the floor, or wiggle up?
on those big names. The concern is really
Waiting to see. 13 seconds, 10 seconds. The next candle.
And what it's going to take. I like history, John. You look back to the 90s when I was a young man. Cisco took a really long time to bounce back from its bull run high in that period to where it is today. You know, it's not going to happen overnight.
Oh, it's pushed down. Beautiful.
I like this
Ah.
G chart on the Bloomberg terminal as well, because very quickly
Like
it
to
shows
see.
the weight that this sector's had on the market. The white line is a basket of, well, basically,
Reversal.
if you strip
Ah.
out tech, S&P 500 mega caps fare well. You put tech back in and they underperform, John. So I think we're really waiting to see if the move by the Fed could give us some relief on yields, because we'll have some certainty in the direction of travel, and perhaps that will give us some painless weeks.
Yes, excellent. Oh, what a move. Beautiful. See, you just got to wait for that move. Not hard. Wait for that move. Big win on that one. I was on the bigger account. Excellent sales there. Rounded off those that account for today. That's the end of that one.
We had Cisco CEO Chuck Robbins on the show with Emily Chang last night. Same message. The demand is there from SMEs right through to large customers. So two very competing messages.
I'm convinced there is no one more awake than Ed Ludlow in San Francisco.
That's all done.
Ed, thank you. Good to catch up, buddy. As always, about 4 minutes into this, one sector's negative. It's energy. It's down by about 0.4%. Taylor Riggs has more. Hey, Taylor.
John, and certainly a run up until today. If you want to take a longer view year to date, it certainly has been oil that's gone up to in the last few days about $122 a barrel. But of course, coming off of that with some of the macro headwinds about a Federal Reserve tackling inflation. And so you see that here, looking at one of the largest 2-day slides that we've had in about 3 weeks, and perhaps maybe some demand falling off as well.
See nowhere to bounce. Again, don't enter another sell. Wait. For the third time we've had a trend line break indicator. 2 times it's failed us. Is this going to be the one? Definitely was worth nipping in on that one we got there. Price is really up high at the moment. So you want to be waiting.
Pay more taxes, and they need to start opening up and helping the American consumer. And so you're sort of getting some of those headline numbers as well, pressuring the industry maybe just
Let's
a
see if
little
we
bit
get any more.
Intermediate
Sell.
basis. I think that what is interesting, and we have a chart here showing
Perfect. Yes, on the smaller account. Beautiful. That's us done, I think. Look at that. Sold at the top. Sold at the top. Got our indicator on there. And we took another.
So certainly making more money, but I think coming out of 2020 when they were losing
Well,
money,
what did we get?
and going back historically,
There, 4 position. I was basically.
Are you just a little bit confused by the
Well,
approach of this administration when it comes to energy companies?
Hugely. I don't
More
understand
nice
why they
sells.
tell them that they're horrible people and then don't expect them to do it.
It just doesn't quite stack up at all. We'll catch up with Anne-Marie a little bit later. Taylor, I'll save you from the politics. Thank you. Just on energy, Bank of America had a fund manager survey out yesterday. I'm sure many of you saw it. All-time low in global growth optimism. Profit outlook the worst since 2008. Then one of the most crowded trades, in fact, the most
That's
crowded
pushing
trade
up.
of investors was long energy, long oil, long energy equities. Now, something surely has to give.
See if this is going to reverse down.
Recession coming down the road. Where are energy equities in that world? I would love to know. Brian Nick's going to weigh in on that in just a moment. But there's a ton of pessimism. We know that, and Bernstein's pushing back. Here's a quote from them. The probability of an outright recession has likely increased. It seems reasonable to expect that earnings need to be cut. However, it's possible the market has overshot this. Kelly Lyons has more. Hey, Kaylee.
Hey, John. Well, speaking of something's going to have to give, there is a mismatch here between the performance of the equity market
And wait for this candle to finish. 2 minutes and see. That reversal was great. Look, it's a little quick down, wasn't it? Profit. As soon as you get that signal.
Have also rolled over, and yet that hasn't really happened to the same
Well,
dramatic extent.
price still wants to try and push it up, but look how it hit our TP. A set on the open. Points of interest line just below it. It's always a zone. How good the system is. So if you're the kind of scalper who wants to hold for key levels, do it. Or like me, take the green, go between 5 and 10 pips a trade. There's different ways. This is how good and accurate the system is for giving you the levels. You make the decision as a trader whether you want to take them or not. They're there and it hit the level.
But so much hinges on inflation pressure and the margin story. The ability of companies to exercise.
Maybe it's going to break above this. If this candle finishes above the resistance higher, if it ranges on down again,
be able to retain margin. That's something we've seen get a lot more difficult for companies like Target and Walmart. And as a whole, S&P 500 margins already fell to 13.1% last quarter. That's down from the 13.9% peak during COVID. And according to Bloomberg Intelligence, analysts forecast that 54% of S&P 500 members will have lower operating margins in the second quarter than they did a year ago, John.
Kelly, thank you. Thank you very much. Just on Kelly's point.
And then we've got 15 minutes or so to the news, the last bit of news, see if that moves anything, and that'll be today's stream done. Another successful day against a backdrop of bad news, indecision. As she said just on Bloomberg, that was a good quote. Never let a good crisis go to waste.
Binky Charter put out a note yesterday afternoon. In fact, we caught up with him a little bit earlier too. He said the focus is increasingly on whether forward estimates are too high and will be the next shoe to drop.
Yeah, they're just struggling to break that, to actually stay above that. We've got 30 seconds left. It's poking above it. Is it going to stick? Is it a qualified buy? Or is our trend line signal going to come to fruition again? Waiting.
Over the last few months.
I think they only come if and when we start to see actual real data from consumers that shows them pulling back, not just on goods, which is what we saw in the retail sales data this morning, but across a variety of other sectors as well. One other example I'll give you in this.
Break it up. There you go. Look at that push up. Beautiful.
Sentiment data. An enormous number of businesses have had to raise prices over the last 6 to 12 months, but the number of businesses that say
Going to hit that key level. Very nice.
This problem is still vanishingly small. So despite the fact that we've seen these price increases, we haven't seen consumers pull back to nearly the extent. I think it's only when we see that we'll get those downgrades in, at least for retail and a number of other sectors as well. We'll start to get some of those recession risk prices.
So hitting that 73 level.
Analyst expectations.
Brian, with that in mind, how do you think the market will respond to that?
Well, we've already seen, 22%-ish decline in the S&P 500. I think some of that is expectations that we're going to see some negative earnings revisions. There's certainly some chance of recession. It's not just a bubble that popped and now we're back to normal. But I do think there's the potential for the market to go lower if it looks like that recession scenario, or I think more specifically, the severe recession scenario is becoming a lot more likely. Again, we're not seeing that in the bond market, right? The yield curve is flat, but it hasn't gone into that steep.
Beautiful buys. Look at that.
Has held up relatively well. So
nipped in on that buy.
I think, and you see in the credit markets as well,
out.
There's difficulty priced in, but there isn't a recession priced in, which means things can get better, but they can also get worse if the data gets worse.
Brian, if the Fed has to back away because the data's bad, is that a good thing for this market? How does equities respond to that situation? I think that's the number one issue for me right now. We understand the Fed wants to get back to neutral, in their words, expeditiously. That could be 75 today. It could be 75 as well at the next meeting. Then they get to what they think is neutral.
1 minute left on this candle.
Neutral. If they're right, if they're wrong, let's assume they are. Then a lot of people believe that by the time they get to September, they'll be confronted with some weak economic data. And Brian, I'm not convinced one way or the other how they respond to it. Are you?
No, I'm not. And I think the last couple of days have really given me a lot more doubts about exactly what the Fed intends to do. So ostensibly, we had an upside inflation surprise. I think a week ago, nobody on the FOMC thought they were going to be raising 75 bips today. And now it looks like it's all but a done deal based on an upside surprise to headline inflation, which should not be the Fed's main concern. So if you get weakness in the employment data over the summer, the housing market data, which I think we will see more weakness, more softening in that data, but energy prices stay
beautiful,
high.
Beautiful. Hey,
I think one thing that I think
nice buys there. We went in with just 0.3 on US-30 on the smaller account.
But a little less
Managed to
credibility
get another
exactly what it's
4 trades away there.
How much stock we can take in what it says it's planning on doing. So ideally, yes, you'd like to see the Fed get expeditiously back to neutral. I think we'll see that neutral rate creep up today. From it's probably too low, somewhere around that 2.5%. But assuming we get there and maybe a few hikes past there, my hope and expectation is that
now we're going to wait.
It's going to be obvious that the Fed doesn't need to do a whole lot more to get those leading indicators for inflation under better control.
Brian, we're going to keep talking about this. We need to talk about energy as well. The S&P right now up by a little more than 1% on the S&P 500. Energy on the S&P down by about 0.6%. Brian Nichols will be sticking with us. Coming up, Washington ramping up efforts to tame soaring gas prices.
I'm doing everything in my power to blunt Putin's gas price hike. Just since he invaded,
do everything in your power, please.
$1.74 a gallon because of nothing else but that.
We'll have a conversation about that next.
what we've got coming up. Business inventories and NAHE housing market news. Will be slightly lower, 68 to 69. Unexpected, bullish, blah blah. But we know how that works. Again, we'll just see result that similarly might not do if we get anything.
Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak.
See if it's home.
Kalau dulu kan rame, sekarang ya ada satu
Break.
itu ada.
I set that level look, you see, and I said US-30 would do it. So you could have entered one trade from the beginning if you wanted to, rather than scalping like I do. It's totally up to you, and just take the one trade or two positions. There was the level it hit. It's going to be support level at 30537. It was going to be that buy 686. See, it did it. So it would be going even higher. Easy as it can be to follow. Nothing's trading. Buy from it. It's discretionary. Never going to be 100% mechanical no matter what. There's always your emotion. Trade, but this is as close as it gets to trading. Overbought zone up 76 now. Higher. Doing everything in my power.
Just since he invaded Ukraine, it's gone up $1.74 a gallon. Because of nothing else but that. Well, I have a plan to bring down the cost of gas and food. We're the largest release of oil from the global fund in history.
What's he saying? Not even talk.
President Biden there, so frustrated he's written a letter to oil companies. Part of it reads as following. At a time of war, refinery profit margins well above normal being passed directly into American families are not acceptable. AMH, I just want you to run through this letter and let's talk about the contradictions of this administration when it comes to this particular
Look at
topic.
box 50 because someone just look at it.
So I think the contradiction you could see at the end of the letter where the president says the administration is prepared to take any, quote, responsible and appropriate steps that would help these countries increase output. So they are going to Houston.
Box 50 is
these major
maybe look as
oil
well.
companies to help with the refining capacity, right? He talked about the SPR. There's a lot of oil in the market, but there's another issue at play, which is the fact that you have to turn that oil into gasoline, into jet fuel, into diesel, things everyday Americans need and are using right now. So the fact of the matter is that the administration is really trying to get these companies on board, but they feel that this administration, coming in to the beginning of this administration, that the tone has been hostile towards them. This administration
Two
has
didn't really happen.
Renewables, embraced ESG, and wants to move the country
It's been nice
off
to
of
the
fossil fuels. But now they're in a situation where they need
again,
it because
in
gasoline
use
is
and
at $5
you
a
know that.
barrel, and there's really a gallon, and there's really nothing that's going to be able to fix that overnight.
AMH, I just think we have to sit on that just for a minute about how ridiculous that ultimately is. How can you push ESG for years and then tell the oil companies that they need to build refiners at the same time openly discuss taxing them and their profits down the road. Can you just explain that?
30
For
pushing
everyone,
up.
That doesn't make sense.
Well, you bring up another point, which is the potential that there could be legislation, which they would need all Democrats to sign on board of this in the Senate, to tax excessive profits of these gasoline companies and oil companies. And you heard the president say that last week. Exxon makes more money than God, and he's going to prove how much their profits are. We're going to go out after them.
What does that even mean? Apple makes more money than God. Are we going after Apple now? They're basically a cash machine. These kind of snarky remarks at the end of speeches about pay your taxes and all this stuff, who's that for? Is that just for the base ahead of the midterms, or is this about setting policy? So it's about politics and not policy.
Well, it has to be about politics, right? Even when you look at potentially taxing these, quote, excessive profits that the Democrats are talking about from oil companies, because they are dealing with this inflation and they are dealing with a reminder every single day to American consumers that a gallon of gasoline is at a record, and it's the highest it's ever been, north of $5 a gallon. This legislation, Jonathan, wouldn't even come into fruition, wouldn't even happen until potentially the fall. So you already see that this is just about messaging ahead of the midterm elections, because the supply and demand story is not going to change overnight. Even if President Biden takes this trip to Saudi, which we know he is, that will not change it overnight.
Yeah.
And especially when you see the report today coming out of the IEA, they are going to be higher prices for longer, because they say this is a problem that is going to last well through 2023.
MH, thank you. Anne-Marie, down in DC, a difficult moment for this administration. Brian Nick's still with us. Brian, for the energy players, something stands out to me that I can't quite see evolving in the same way as some people. Can you have a scenario where global growth rolls over? Something everyone is very pessimistic about.
Waiting on this news now.
Forward to happening, and not optimistically so. At the same
US-30 is
time,
pushing higher. This is cool.
Do those things
Buy
stack up? Can you
back
reconcile those
our
two
key
things?
level here. Look, 308.
Very mild.
Worry.
Interestingly, what we saw in the
Drop
retail
off.
sales data this
Bad
morning
news.
is that people bought about 4% more
As you
gasoline in May
see,
than they did in April, and gasoline prices
you're
were about
recouping
4%
all those
higher
losses.
in May than they were.
Bang.
So it's sort of a perfect, correlation between the
301
rising prices and how
on.
much people were buying. If there is that inelasticity with respect to how much people are spending, then yes, in a softer environment in which purchases of other types of things are going down, gas and energy generally can hold up relatively well. But I think in a more severe scenario, which I think is more what people are forecasting, if we have a hard landing, it's hard to imagine there isn't going to be enough demand destruction among energy users that you're not going to see global demand go significantly lower. Every time we had a China lockdown news, we saw the oil price dip a bit, even though we weren't getting, I think, a full picture of what was happening over there. If you see U.S., Eurozone, UK, Japan going into some kind of recession, then I don't think we're going to be at $120 barrels of oil, and energy won't be the leading sector.
So, Brian, I went through the most crowded trades right now in the Bank of America Fund Manager survey. One was oil, the other was energy equities. And you're comparing two different asset classes, Brian, when you do that. You're comparing a physical good, supply and demand clears at spots, to an anticipatory asset class, equities. This is something Goldman has done a lot of work on. And, Brian, at some point, you'd fade the move in energy then. Is that moment right now, given we're already off our highs year to date anyway?
Energy, but if you have profits in energy, which is probably the only place you do have profits this year, taking some of those and redistributing it into maybe a more defensive mix of stocks, maybe taking a flyer on some of these growth stocks, not the ones that don't have earnings, but the established companies that have gotten really beaten up this year. If we do end up with that softer landing or just a normalized economy that looks more like pre-pandemic, then we know those stocks are going to continue to deliver earnings and deliver returns for shareholders. So distributing it more, I say, not being underweight energy, because I think there's still too much risk around the price in the near term, but being more
5 minutes to go till the news. The final trades of the day. 4 minutes. Let's see if these move the US-30 in any way, shape or form.
If the Fed went big today, 75 plus, let's call it 100, would that scare you off? Is that a market you run away from or a market you buy?
Today, I think you'd see a little bit of a panic in the near term, but I think things would settle down pretty quickly, and there would at least be a sense that we're not going to have a runaway inflation. So that scenario where we have an overheating economy and interest rates to the moon probably gets taken off the table, and that's enough to see a little bit of a relief rally in stocks. It's more of what we saw just the last 2 months until the last few weeks, with the inflation concerns coming back in. So it doesn't take the recession risk off the table, but I think it does take the rates to the moon risk off the table.
Brian,
so
Nick,
I would be a buyer.
Nuveen would be a buyer. Brian, thank you, buddy. As always, looking forward to the Fed special coverage coming up a little bit later, of course, 2 p.m. Eastern time, the decision. 30 minutes after that, we'll hear from Chairman Powell. Coming up, your trading diary from New York City. This is Bloomberg.
There. Get ready. 3 minutes to go.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From business's most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic. We could continue to see that kind of strength.
Countdown, there it is.
Premieres Friday with replays all weekend on
Very bullish against all the news. Pull back. See a VWAP line when it reset. Well above the. Got to retest. Then who knows? Across the VWAP.
Crypto, you have a world of young people that want
Stop
their
loss
own financial
below.
system and their own culture.
Level.
And it is very powerful.
That's how you want to trade.
I'm a believer in it.
More of a swing trade to me, but yes, that's do it using this system. That's the thing about it.
25 minutes into the session, equities higher by 1.3% on the S&P, on the NASDAQ up by 1.5%. Going into the Federal Reserve a little bit later this afternoon, a lot of the refresh calls we've seen going into this one.
Need to go.
75 basis point interest rate hike. As the price
Anyway,
action,
mention
here's your trading diary. The focus
medium
on
impact.
central banks. The ECB President Christine Lagarde scheduled to speak at 12:20 Eastern this afternoon. Look out for that. And then it's the Fed's turn. A rate decision at 2 p.m. Eastern time, followed by
Big
Chairman
one.
Powell and a news conference at 2:30 Eastern. The Bank of England out with a rate decision tomorrow morning. Looking forward to that, alongside jobless claims too. And finally, we round out the week with a Bank of Japan rate decision on Friday as well. Is that enough for everyone? More still to come from New York City. This was the Countdown
Is
to
that enough?
Bloomberg. Thank you for choosing Bloomberg TV. This
Thank
is
you,
Bloomberg.
John. We go 20 seconds, counting down. Let's see if we can get a final trade. See if it moves anything. Going to push higher. Entry. It's unexpected. Seven. That's reversal.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
It's on the resistance.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why
Good, looking good.
would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
See.
Pepsi's Number Fever campaign in the Philippines has probably gone down in
no trade at the moment on this. We'll just wait and see. We'll sell. See the new expected. Just get a move down to the downside on the RSI. We'll take this out. Yes, there we go. Down there, waiting. The price action small. Thanks for joining me today. I'll be back next week. Scalping. DAX will go. Good. again. Reversal. See. Extend 79. Got a power move signal as well. Come on. Good. One with the other. Oh, yeah, we're at a key level. Usual 3 times and no break. It does happen though. All you got to do is just wait for that break. Wait and see if we get a sell on this. Like I said, get a red RSI or a dip down out of that zone on the sell. Sorry. That's what. Yeah, and DAX is set up for tomorrow. Again, thank you for joining us. It's been a really good stream again. Very profitable, very quick, and that's what it's all about. That's what true scalping is about. So go to the website www.mohawkforex.com. Join our team and learn true scalp. And yeah, thank you to everybody. Enjoy the Fed news tonight. Let's get in on that as well. On gold will probably be the best one, or US-30. I'm sure most markets will actually move. So even trade it is watching it, markets will and react to it. So until our next live stream, take care everybody, trade safe, see you on the next one. Bye.